Hi everyone, welcome back to another video. It's your girl Mira Forex and I'm back again with another video. I'm finally seeing some consistent profitability in my trading, so I thought I should share some few things that helped me get to this point. Really, I'm enjoying this series so far that I've been making, concerning how you can able to balance your job and also trade, and also how you could actually trading and also working while go into furthermore maybe transitioning into a full-time trader, because different, right? So perhaps some people might have people who are taking care of them, some people might not have, but I think teenagers who really want to go into trading because of you want to overcome your circumstances, maybe you don't have money to take care of yourself, or maybe because of you want to make money to help your family. At the same time, you don't want to be going into trading with the scarcity mindset of you're getting rich quick, or you want to make the money so fast. Okay, and this is something that is not well spoken about in the industry. Show you how you can learn how to trade, how you can flip money, how you can make money, but they don't really share with you all the details on how you could go about the process, or maybe how you could balance your life, how you could balance trading, or how you could balance every other thing apart from life, or the kind of things you should learn when your own life differs from this kind of person's life, right? Because everything you do outside of your life reflects also in your charts, okay, or also in your trading. So in this video, I'm going to be sharing with you guys some of the few things I did and develop a strategy or an edge that fits my personality or that resonates with me. And these are the tips I had to look into for you to also, maybe if it's something that resonates with you and if it's something you want to try, you can go as well and try it, and perhaps this might help you. And if it's your first time here, my name is Mira Forex. I'm documenting my Forex trading journey here, so please do well to like and subscribe if this is the kind of video you like. Alright guys, so the first on the list is that you really have to ask yourself, what type of trader do I want to be? Okay, these questions actually raise up the idea that, okay, since I'm somebody who is coming into trading and I don't have money to trade, I will have something else I'm doing while I'm learning how to trade, or while I'm trading, before I transition into trading into full time. Okay, you have to be like a monkey before you jump into the other tree. You still holding the other tree before you jump to the other channel. Finally, when you're in the other tree, you can then leave your hands. All right, so that's basically what I'm trying to share with you all right now. So asking yourself what type of trader do you want to be helps you understand that you can't be a scalper if you're somebody that you're going to be trading and you're going to be working, because you can't even spend at least 30 minutes in the charts, actually wait for the full setup to happen. So at the beginning of my journey, if you guys know, before I got this job I'm working now, I was actually trading the ICT 2022 mentorship, but after I got a job, I actually had to transition into a much higher time frame and chill. I was using the 5 minutes, but I transitioned into a 1 hour time frame, but later on I still transitioned down into 30 minutes. Finally now I'm using the 15 minutes. Okay, so you have to ask yourself, what type of trader are you, right? For you to know that because of my job or because of my schedules, I can't be in the chart, so I need to understand what type of trader do I want to be, which is also, you have to check your personality. What is your level of patience? All right, you want to know, am I somebody that can hold up trades? Okay, so these are the things you need to consider. And my own experience at the beginning of my journey as well, I was trading the 2022 mentorship, which required you trading the lower time frame, which is the 5 minutes, the 1 minute, and the 2 minutes. Okay, you're looking for your entries there. At the beginning of that time, I was trading both the London and the New York sessions. I take a trade in London kill zone, I take a trade in the New York kill zone. Okay, at the end of the day, I was taking so many trades, which is something I'm still going to come over at the end of this video, which is something I want you to sit around and hear me out. Okay, so at that time I was trading in 2022 mentorship. Then the 2022 mentorship doesn't work, but it wasn't working for me at that time, because now that I'm going to be transitioning into trading and also balancing with work, I can't be in the charts waiting for London kill zone and waiting for New York kill zone, because my work, as I work 8-hour shifts each day, it overlaps with the time of the London kill zone when I'm working morning, and it overlaps with the afternoon shift when I'm working afternoon. So at the end of the day, I didn't have that so much time at hand to be at the charts every time. So that's why I had to transition into 1 hour, and a strategy that is 1 hour. So I went from ICT 2022 mentorship to trading the ICT one shot one kill, which is I'm looking for the high of the week and low of the week between Monday to Tuesday and Wednesday, which is the highest probability of the high or the low of the week for me, and then I'm looking forward to taking my trade. So this is something you have to check out for. There are a lot of strategy out there, but you also have to understand that it's not what works for this person that will also work for you. You have to look for a strategy that resonates with you and fits your personality. Third part of this is like, this is something that is very, very important, guys. Because of you're going to be working and because of you're going to be trading, you have to examine your edge and determine the highest risk to reward ratio it offers. Okay, why is this important? Because you don't want to be going into a trade when you see a setup with your edge, you enter a trade, and when price has gone so far, it hasn't hit it, your price is reversing back at you and taking you out. It's frustrating. So this is something you have to really, really examine your edge and know, like, how many minutes does it take for your edge to reach 1:1 or 1:2. Okay, as for me, I use a 2:1 risk to reward ratio, which has been the best so far, and this was possible from my journals. Okay, being able to go back to my journals and be like, okay, what is the best RR that I've been getting so far, or this my strategy offers me the most. Okay, I go for the 2:1. At the end of the day, it's like, should I say, it's like most of the times I see my trade not hitting TP. It's just a little bit tip of the iceberg that don't hit TP before price totally reverse back at me. So this is something that is very important, and it should be in your trading plan, that you're aiming for this, so that you don't get so fancy and you're looking for the lowest low, you're looking for the highest high, and at the end of the day, after entering a trade, you don't even hit TP, price continuously reversing back at you. It's frustrating. But having that fixed risk to reward helps you understand the amount of time that your trade is running, helps you understand the amount of profits you're taking, in order for you to understand that everything you're doing in trading is compounding. So if you're risking one, you're making two. If you're risking one, you're making three. So examine your edge and understand the highest risk to reward it offers. It's really, really help your journey. Another one is always use a fixed risk. Consistency is very, very important. Okay, you should always have a fixed risk per trade. All right, guys, why is this important? You don't want to be going into trading and your trading curve looks like this, goes up and goes up down. So you have to have a fixed risk per every trade you take. If you want to be somebody that is conservative, you're risking 1% on every trade, you're making 2% with your risk to reward. It's very, very important, so that you don't go into a trade and then you're having all your emotions at hand. Okay, that's I'm risking to, like, you don't even know what you're risking before you enter a trade. Okay, it's very, very important that in your trading plan it's stated that, okay, this is the amount of risk I am willing to take on this my account. All right, so at the end of the day, everything you're doing is compounding, and also you're having a free mind whenever you're going on your day-to-day activities, knowing that you're just risking this to make this. Because if you're not consistent with your risk, you might not know what it feels like going up or going down, or you won't even have the confidence, or that if I'm using a risk to reward of 2:1, that means if I should take one loss, if I should take another win, it's going to make me back the loss and I'm going to still be up with another profit. So it's important that you have a fixed risk. Okay, I don't know why that word is so hard for me to pronounce. All right, so it's very, very important. It's stated in your trading plan that you should have a fixed risk. For me, I have a fixed risk that I only use 0.50, that's 0.5%, but as time goes on, there are some capitals I have in my my account. If I should have a buffer like this, then I risk 1%. Okay, it's just basically something you have to plan ahead and keep on going and living your comfort zone as time goes on. So if you're able to risk 0.50 consistently and you're okay with it, you can then increase your hand to maybe 1%. And remember, it is the amount of money you have that determines the kind of risk appetite you have in the market. Another one is that you have to set daily rules and routines that keeps you grounded and disciplined. Okay, you have to be somebody that you have a rule that is written out, that if I should take 1 or 2 trades, I'm out of the market, so that you don't overtrade, or that maybe today when you come back from your job, you're looking for this particular trade in the New York session, and maybe after your job, next thing you are looking to take another trade in this session, but it is not in your rule. Okay, if you don't have a rule that govern you, that means you're gonna be doing a lot of stuff, then you can't even be able to know where to improve on when you're not going with your rule. Okay, if you don't have something you're guiding yourself with to maybe keep yourself accountable and be like, did I follow this rule, that this is something if I should do that's going to make me a better person, then if you don't have something like that, you'll just be doing everything randomly. So this is something you have to have a rule that is guiding you and is keeping you grounded and is keeping you disciplined. Okay, like me, some of the important things in my rule, I'm not gonna lie, all right, I still struggle with it, but you don't just get disciplined immediately. Okay, some of the things I'm trying to do is set and forget. Okay, it's been hard, but I'm still trying most times. And also another thing is, do not tamper with trades. You're trading mechanically, stop loss or TP, right? And this is also something you should also implement in your own type of mechanical trading rule, whereby you're not touching your trade, you're setting or TP, because once you start touching or tampering with this trade, it affects your risk to reward ratio, or it affects the compounding effects of your trades. Okay, so these are the rules that helps guide you, that after you take 1 or 2 trades, you're out of the market. If you set your entry, you're out of the market, you're not watching the trade. And these are the rules that will actually help you grow as a human being, and these are the rules you can look back at after you take a trade. Even the outcome, you be like, did I follow my rule? And if yes, you're good to go. And this is the only way you can actually grow as a trader. The fifth one is that you have to have a clear process. That's by forecasting, by journaling, by reviewing, because how then do you want to improve if you don't measure? All right, so this is one of the most important parts in trading, because I use forecasting as a process, and I always say this, that trading should be systematic, and going in and out of a trade should feel repetitive. Okay, what am I talking about? Having a system or having a process towards trading. So if you're not able to do your forecasting, how then would you know what the markets might do or what the markets might not do? So having a process whereby you do your forecasting and then you're setting alerts in your phone, and whenever you get price trigger in that alert, you back in the chart, so that you don't spend most of your hours or most of your time, even at your job, you're scrolling through your phone or you're hiding, going to the toilet. That's basically because you don't have a process of trading. All right, this is something me too I'm looking forward to actually doing in the future, is maybe having a smartwatch whereby after doing my forecasting, I can just set an alert, and immediately if I should get an alert on my watch that price has reached this level, I might wait maybe 2, 3, 4 minutes for that particular thing to happen. Because if price hasn't gotten to the POI where you want to take a trade, what are you looking for in the lower time frame, or what are you even looking forward to in the chart? Okay, I can wait for 15 to 30 minutes, because there's this particular person who actually helped me in my trading, was like, how many minutes does it take for your setup to happen? In an hour candle, you're trading the 15 minutes. It takes up to 1, 2, 3, 4 candles for my trade entry to happen. That's basically with data I've gotten, okay, whereby we are getting the sweep at that POI, another candle is coming down, which is causing the displacement, another candle is coming down, which is causing the shift in market structure, before another candle retraces up back. So that candle that is breaking shift in market structure is something you can be able to gauge, and before you come to your phone, price might already be doing something you want to see, and then you're setting your entries. Okay, so everything I just said now is number one, is that you have to ask yourself what type of trader do you want to be, and number two is that you have to find a system or an edge that resonates with you, and number three is you have to examine your edge and determine the highest risk to reward ratio it offers, and number four is always use a fixed risk per every trade you take, because consistency is very, very important, right? To set rules and routines that helps keeps you grounded and disciplined. And the last one is you have to develop a process or a system that helps you make trading feel repetitive, because if trading start becoming boring to you, that you're not in the chart always like having headache over and over again, that's when trading starts to make sense. So I hope this video was insightful, and I hope I was able to share some of the light that helped me become who I am today in my trading journey, and I hope it can also be helpful to someone out there. So if it was, please leave us a like and subscribe to the channel. All right, peace, and stay tuned for more videos. All right.